Okay, just a quick word about the Green Star Trading Patreon. If you're not a member yet, I just want to give you a quick taste of what we've been doing over the last few weeks and what you can expect to get if you sign up. So follow the link in the description box below if you're interested. Have a read of these tiers here. You just need to click on the show more button to have a read of what you get. Benefits are listed below. If we scroll down, I'll give you a little bit about the channel here, and then you can see what we've recently uploaded. So we've had the Green Star Trading live stream for the 3rd of February 2023. This was another 4-hour session where we went through multiple stocks and cryptos. You've got the dividend stocks review and picks for February 2023. I think there was 32 ex-dividends up this month. And to go along with that, we have the dividend calendar and stock rating system for February 2023. These are downloadable PDFs. I can make available the Excel sheet if you want it on the Discord. I can send it to you. And also we've got another live stream then at the back end of January, and we had the economic indicators for January 2023 as well, looking forward into the future, looking at housing, looking at the ISM, looking at a whole bunch of different things. And so this is all the extra content you can unlock, plus all of the educational content like the Elliott Wave series, trading series, technical analysis series, all available here on the Patreon. But the best way to access all of them, if you join our most popular tier 2 here, is via the Discord. Everything's on there, everything's got its own channel, and you can interact with the rest of the community on there as well. So there you go, guys. Thank you very much for listening. I hope you consider joining and enjoying the many benefits. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at ETH USD, Ethereum, and we're going to be going over the differences between it and Bitcoin. We're also going to be looking at classical analysis as well as the primary count, which is bullish, and a bearish option and an alternative bullish option, which I haven't seen considered. It may have been by somebody, it's always possible, there's a lot of eliticians out there, but it's not something I've considered until recently. So we've got a few things to go over today, but I want to start with the classical analysis first. So we're just going to turn the counts back off. I was just making sure we're in the right order. And we'll get on the way. So you'll have to forgive me if I'm still coughing and spluttering a little bit. I'm feeling a lot better, but I'm still a bit bunged up after getting over a cold last week. So we'll just do the best we can. So first thing I want to go over are the price declines, because we are essentially saying this is not something we've been saying in Bitcoin until recently, until the November lows, and until more recently since then, once we've seen price action about what we want to see off of those lows. But with Ethereum, if you go back and watch the last update, we were saying that this was an impulse off of the low in June and this was the likely low. This is the likely bottom. Now, since then, and all subsequent price action since continues to support that idea. So if we bottomed in June, we got an 82% decline in price. Okay, now the one in the bear market in 2018 was a 94.83% decline in price. I remember it like it was yesterday. I've been in crypto since late 2015, and this was a very unpleasant experience. I'm not saying that those of you who are new to crypto, who've been through an 80% decline, have suffered any more or any less. I'm just saying this one was worse. Okay, but it probably doesn't feel that way because market participation has expanded considerably since then. Now, the next thing I want to point out is the time. Okay, so we've got a 330 something day correction over here, 328 day correction over here, and we have a 220 day correction here. So it is both shorter, so it's smaller in both magnitude and severity than the 2018 bear market was. Now, this is different from what we've seen in Bitcoin. For some reason that blows people's minds sometimes, and yet I get asked frequently on YouTube and in other places also to constantly cover X, Y, Z altcoin, you know, and to look at this one and that one and give and provide an alternative or a separate count from what I'm looking at in Bitcoin. And yet when I point out that Ethereum is not Bitcoin and is doing something different, so for some strange reason some people's heads explode. But it is not Bitcoin and it is doing something different, and yet it is doing something similar. Okay, so we need to explain that. We did not get the lows in November, the lower lows, we got a higher low instead than in Ethereum that we didn't get in Bitcoin. So Let's now look at, in the most simplest sense, the structure we're observing here. So we have something extremely similar. A zigzag down, a 5-wave move up, a 3-wave pull back, and then a move back to that level. Okay, that's before we pop, before we go higher. If we take a look at this, we get a zigzag down, a move back, and then a move back to that level. So the difference in size, obviously, but if we look at the actual pattern, it's basically the exact same thing. Zigzag down, move up, move back up to that level, zigzag down, move up, move back up to that level. So they've both been sharp declines, literal sharps, in terms of the interpretation of the correction itself. Is a sharp correction. This is a sharp correction. This is 90 odd percent, this is 80 odd percent. This is 5 up and 3 back. This is 5 up and 3 back. Why do they look so similar? Well, the reason they look so similar is because they are 1 and 2, 1 and 2, 1 and 2, 1 and 2. That's what our count's been for a long time. Go all the way back to last summer when I introduced the idea of, or explained in detail in a video covering the idea of the extension count in Ethereum and Bitcoin. You can find that on my YouTube channel. So nothing's changed here. At least in Ethereum from a June low. So we've got the same pattern twice, except this one is smaller than this one in both scale, in both magnitude and severity. So this is a nesting 1-2 of this 1-2, and we're talking about Ethereum. So keep your mouth shut if you're about to say what I think you're about to say. We're talking about Ethereum. Now, the next thing I want to look at is the moving averages. So getting back through the 250 exponential daily moving average is not always an easy process. It's often fraught with pretty severe retracements. Now, we have set this structure underneath it this time, as opposed to above it and below it like we did here. This is a 90% decline, and this is a larger amount of time. Okay, going to have a greater impact upon moving averages over a longer amount of time, and greater volatility between it. This is a smaller move overall in scale and time, and it has set its first 1 and 2 below it. But we have come back to it, and we've come back to it at the same time as we're testing that prior level, just like we did back in that prior 1-2. You can see, if we just zoom in for a moment, we're back here at the 250 exponential moving average. Okay, so we're bumping into resistance in more ways than just one at the moment. If we bring up our support resistance levels, you can see how we found support bang on the monthly closes. Okay, well actually that's a little below the monthly closes. These are a series of highs and lows here that we've got at the top of that previous structure, plus a back test here within the larger wave 3 at 908 spot 62s where we found support. If we look at the monthly close, it's actually this trading level here that we basically traded around and found support as well. Let's just bring up our support and resistance. You can see how we've come back to this prior level that was support, and support again, and then was resistance. Okay, and now it's resistance again at 1717 spot 46. Okay, so if we break through that level, the next major level we're going to bump into is going to be here, 2169 spot 77. If we also look at our FRVPs going back in time, we can see that from the high to the low, we have our point of control right around that same level. So we're bumping into supply. Okay, prior high here now. So we're coming back into resistance, we're coming back into supply, we're coming back into an area where we are likely going to bump into resistance, we're likely going to reverse course. I don't think we're going to reverse course and make lower lows, but I think it's very likely, well not very likely, I think it's likely that we will reverse course to find a higher low before breaking out and moving much higher. That's essentially what I'm expecting at the moment. Okay, so that's some of the structure we've looked at. Now let's touch on we're now on the weekly time frame. Let's look at the moving averages here on the weekly time frame. we can see now that we have crossed the 250 exponential weekly moving average with the 10 and the 20, which are the yellow and the blue lines pointing upwards, for the first time since we came out of the bear market in 2020. So we had that initial 1 and 2 back, and then we dragged the 10 and the 20 up through the 250 here, and then we had a strong bullish move up until we collapsed all the way back through them, and now we're dragging them back through them again. Not a guarantee that we bottomed, but a good sign, having gone all the way back through it and all the way back above it. If we look at our indicators as well, at this point we can see that we got very similar price action on the weekly time frame in the prior bear market as we did into this one. So if we look back at the wave 3 into the wave 5 of the prior market, bull market, there's 3 into 5. Okay, bearish divergence, higher highs in price, lower lows in RSI. We got 3 waves of divergence here because we have 3, 4, the strongest RSI move, 3 within the 3, then we have the 3 itself into the 4, then we have the 5, 3, 4, 3, 4, 5. And this takes us into multiple weekly divergence, bearish divergence, until we break down. So we had divergence from 3 into 4 into 5, and we got a weekly move from overbought to oversold, overbought to oversold, overbought to oversold. This is very much how the bear markets in crypto tend to go. Extreme overbought readings at the top in weekly time frame, reaching all the way back into oversold. We got more oversold than the prior bear market. This is the same price action, same strength and same indicator action we've seen in Bitcoin. Okay, we're now back with the signal having moved back through the average and now just tagging the zero bound on the MACD. Okay, just getting above it. Some strong bullish momentum here building, bearish momentum weakening, but we've still got a fair old way to go. Just as we did out of the low of 2018, we had to push our way back above the zero bound, then we had that sell-off and that long correction area into which finished in March 2020 with the COVID low. We may well be doing something here as well. However, we don't necessarily have to, because if we are continuing the trend of 1 2 1 2 1 2 1 2 1 2, eventually we accelerate into 3 4 3 4 3 4 3 4. I suspect that's what's coming. Okay, so that's the indicators done, that's the structures done. Now I just wanted to look at some interesting geometry as well, and then we'll come in and look at the counts. So first thing I want to look at is, we'll look at that pitchfork in context later. So this pitchfork here, now this is going to be included in an alternate count later, because this is quite different from Bitcoin, again, because it's not Bitcoin. But if, for example, we wanted to consider that the price action contained within this pitchfork from this swing off of the last bear market low to the COVID low was actually still intact, it gives us an opportunity to interpret all of the move off of that low very differently from how we have done in Bitcoin. Now, it doesn't mean that it's correct, it's not my primary count, but it's something we'll cover later. I just find it interesting that this piece of geometry is held, whereas it broke down in Bitcoin. Now, there is some pretty significant resistance we're engaging at the moment. I've already spoken about it. We've got horizontal resistance, we've got the 250-day exponential moving average, and we've got the 61.8% golden ratio from the median line to the bottom here in this pitchfork, which we tagged a couple of times now, which is also proving resistance. So we're in a real inflection point at the moment. If we get one more burst higher, in my mind, and I think relatively clearly, we will have a 5-wave move off of the low. And it will be one of the clearer 5-wave moves, much clearer than it has been in the past, like out of the COVID low, which was a bit of a nightmare, trying to get out of there cleanly. This looks much better overall, but we are coming to that major area of resistance. So that's enough dilly-daddling and muddling about. Now let's come and have a look at the various counts. So let's start with the primary bullish count. Okay, so cycle wave 1 and 2, bigger and deeper. Primary wave 1 into 2, shallower and shorter. We then come into, let's come down to the day time frame. Actually, let's come down to the 4 hours so we can get all the extra detail up. We then form a low, and we get 5 waves up off of that low. This is another significant difference from Bitcoin, right? Because we get subdivision within the 3 with no overlapping, complete structures with good Fibonacci relationships, extensions and retracements all in place to create 5 waves off of a low. Something that we don't get in many other crypto. Well, we do get in some other cryptos, but we don't get it in Bitcoin. There's a few others which display far more corrective behaviour off of the June low, and subsequently make lower lows in November, because that was not an impulse for them. It was an impulse for Ethereum. This leads us into a 1. We get a W, X and Y double zigzag into 2. ABC, ABC, ABC. From here, we now are stepping down another wave degree from primary into intermediate, which is the larger wave I think we're in now, into minor, which was the first move off of the low. Now I've said minor because I don't feel that the impulse was sufficient in breadth and time to consider it to be an intermediate degree wave. The correction is up for debate. It may be significant enough. It is not short. It actually comes bottoms in between the 2 and the 2618 fib time levels. This can be a bit misleading. People see 2 and think double. It's not actually double. It's equal to in length to the impulse. And the 2.618 is the length of the impulse plus 61.8% of the length of that impulse, and that's where we bottomed in this region here. That's very typical behavior for a larger wave degree correction, like an intermediate wave. So I'm in 2 minds as to whether that should have brackets around it and be intermediate, but if the actual impulse itself just doesn't feel sufficient enough, and the subsequent price action doesn't feel right either, so it's a bit of a wash. It could be an intermediate degree. I'm going to say minor for the moment. I can always upgrade it within intermediate 1. So minor 1 down into minor 2. This drops us down another wave degree into minute 1, into minute 2. I'm expecting it to come soon. It may even be done. Okay, because we can get from the low, we can get 1, 2, 3, 4, 5 to a higher high. We can get that. So we could have 5 off of the low here. I would much prefer to see this, just to get it clearer. So the way I'm interpreting this on the shorter time frame, let's come down again. Excuse me, clearing my throat. Like I said, I've still got a bit of a cold. 1, 2, 3, 4, 5 truncation here in the first wave off of the low. Weak price action. Very tentative move off of the low. Not surprising considering the sheer bearishness around at the time. They're rare, but the psychological circumstances were in place for a truncation to occur, and I'm going to go with it. We then have 3 waves down into A, 3 waves up into B, and a clear 1, 2, 3, 4, 5 down into C to get a expanded flat pattern. Okay, so if we just have a quick look at how this flat pattern shapes out, it settles just shy of the 2618, goes beyond the 1618, so it's a very expansive C. Now if we come off of log for a minute, you can see it's very little different. But if we look at the expansion of the B, we can see that it was just shy of the 1618. Came straight up to it. So it's just a big bugger at the end of the day. We've seen them in crypto several times. I've had to rewrite the book in my own... Well, I won't rewrite it for anybody else. It's not my business to do that. But I've had to rewrite it for myself. Expansive flats with large extended wave Cs are far more common in crypto. I've seen them in commodities as well, but nowhere near as frequently as I've seen them in cryptocurrency over the last couple of years. So I've become more open-minded to it. From there, that 1, excuse me, is in slightly wrong place. 1 goes there. We have a 1, A, B, C into 2 here, and then we have 1, 2, 3, 4, 5 into 1 and 2 at micro degree, then 1, 2, 3, 4, 5 sub micro into micro 3, 4, 5 into sub minuet degree, 3, 4, 5 into minuet degree into a running triangle. A, B, C, D and E. We can position the actually I think we'd be better off doing that, positioning the 5 over here and within the minuet 3, so we get A, B, C, D, E. Running triangles are actually quite common, you know, when we get that expansive price extreme, but it's perfectly legal. The B expands beyond where the A began, the C stays within the A, the E stays within the C, the D stays within the B. We then have 1, 2, 3, 4 and 5 up into what I'm assuming is subminuet 1. I'm not certain that it is. That could have been the top. So it's possible that the minuet 5 we've got labelled up here could be here, with a brief 5th wave, which makes this a larger 1 again, and then we come down into a more substantial correction. Now if it's not, what we're going to have here is another wave 1 of subminuet degree, and then an ABC, and then we'll continue to push higher for that 5th. Now that's what I'd like to see, because it's going to put it out of contention, I think, at that point, that we've definitely had 5 off of the low. I don't think anyone is going to look at that and tell me it's not 5. Okay, so that's what we're going to look for. It could be 5 already, I'm just not sold, it just doesn't quite look done. Okay, so that's how I'm looking at excuse me, that's how I'm looking at the primary count on the smaller time frame. Right, so that brings us up to speed with the primary count, so let's consider some alternatives now. So we've got 1 into 2, we've got 1 into 2 to come again, a minute degree, and then we are off in the 3 for 3 for 3 for 3 parley time. Right. If this is correct and that same pattern's repeated, then we will explode higher in the coming months throughout this year. We probably, if this is correct and we've got the 1, we may have been done, but if we haven't and we've still got the 1 to complete, we've got at least another couple of weeks. Then we've got the best part of the month for a pullback. It could be shorter, it could be a couple of weeks, but it could be longer. But even if it's a couple of weeks, we've then got to go 3, 4, 5 within the 3 at minor degree to get the 4 at minor degree, to get the 5 to get the intermediate 1, which I think will have us somewhere back towards the highs. And then we're going to have a massive correction again. Okay? Because then we'll have the intermediate degree to this primary degree. Brackets around it. And I think that will look better than this. See, what the reason I'm reluctant to label that intermediate degree is this, if that's intermediate 1 and 2, right, and this was primary 1 and 2, it just doesn't look big enough. Doesn't look big enough. Whereas that and that now looks big enough to be intermediate 1 and 2. See, so sorry, I'm digressing. Okay, so let's carry on. Just to clear up, the invalidation level for this count, with the June low being the low and the 1 and the 2 minor wave degree move off of the low, the invalidation point is 883.60. Any move below this, all of that, everything since the June low is incorrect, and we have to have a rethink about what's going on. Okay, so now let's turn off these two. We'll leave the primary on. No, actually we won't. We need to look at something different first. So, an alternate bullish count. I have seen this expressed slightly differently, but the same idea. You'll understand that in a moment. So, alternate bullish count. This is the idea that the pitchfork here confirms that we have not completed 5 waves from the 2018 low. Rather than saying this was the top in 5, as we were saying with our primary, we're considering the possibility that what we got was a really nice example of alternation in both time and severity again, between the very, very deep zigzag of 2 and the slow, meandering, expansive flat of 4. Right. This is not, it just doesn't look right in Bitcoin. Flat out. It just, I'm not saying it's impossible, it just doesn't look right. Here in Ether, when we look at how we play with this 61.8 golden zone here, and here, and here, and the 38.2 here, and the median line here, this pitchfork's definitely still playing with the price. The algorithms are still bouncing around this piece of geometry. So if that's the case, then this could be 1, 2, 3, 4, and this is now 1 and 2, in which case this is minor degree, and that's why it looks right rather than as an intermediate degree, because it's within intermediate 5. And now we're going to get out of here 3, 4 and 5 to new highs. Now exactly where we go I don't know. We only legally really have to clear the top or get very close to it if we were to truncate, but I think that's unlikely in crypto to truncate in a fifth at a larger wave degree. I don't think there's an example of it before. So I would expect to go to new highs. If we come back to the top of the pitchfork, depends how long it takes to get there. That's the next thing. Threes can be quite curved in Bitcoin and slow to get going, but they can be very violent when they conclude. So if that is 1 and that is 2, 3 could rush up to here, 4 sideways for a while, 5th could explode and we could have a blow off top, and you could be looking at anywhere between 10,000, or maybe the high, if we go to the median line, don't truncate, around 10,000. You could be looking all the way up to about the high 20,000s if we get something like that. I don't know. But this is the alternate bullish count. 1, 2 here, 3, 4, 5 to come, that minor degree, and this will complete a larger primary degree eventually, and then we will have the subsequent correction at primary degree to this cycle degree back here. It was not this move here, but which was the 1, 2 to this, so that would be likely another 80+% decline out into the future. Like I said, it's an alternate, it's not the primary. I prefer the primary to this because the only way I can get down in 5 in the C is to have an expanding ending diagonal in the C. So we've gone 1, 2, 3, 4, 5 in the C, A, B, C flat to get 3 into 4 at intermediate degree. No overlap of primary of intermediate 1, and staying within the initial pivot of 1 and 2 when placing this pitchfork on the chart. So interesting alternate idea, could be right, not my primary. Okay, now we'll look at the bearish count. Actually no, just before we do, I realised I never looked at that other pitchfork, did I? So looking at the other pitchfork here to support the primary count, I like how this is shaping up. Now this is 1 and 2 and 1 and 2 and 1 and 2 that we're going to get. Now why do I like that? It's because of the behaviour around the bottom of this pitchfork here. This is extremely normal behaviour for a wave 3. If that wave 3 is indeed 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, extended wave 3. What you tend to see around the pitchfork when you get this extended price action is a sideways drift in the nesting structures of 1s and 2s, which takes you well out of it, and then you break it in a rather extreme manner. So what you tend to see, and this is not just crypto, this is wherever you see really powerful wave 3 extensions, you tend to get 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and then you break higher. You get this drifting structure. I haven't drawn it particularly well there. Let's have another go. You go 1, 2 like that, and then you tend to go 1, 2, 1, 2, 1, 2, and then you erupt 3, 4, 3, 4, and you go higher and you start overlapping at the other end, right? And in fact, if you underswing here or throw under, throw under, whatever you want to call it, you tend to throw over at the top end here in the 3 and 4s, and you can rip that rip the entire pitchfork apart. Now, as an example, we see it here building up now on the larger time frame. 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4. We erupt higher, but we've already got an example of it on the smaller time frame. Okay, so if we come back to 4 hour and we take a look at this pitchfork here, okay, here's an example of a powerful wave 3, We go 1 and 2, 1 and 2, 1 and 2, 1 and 2, and then woof, off we go straight to the top. And it just tends to be the behaviour of a wave 3. So if we're witnessing that on the larger time frame, I think that supports the primary count. It's not the strongest support. It's an observation I've made over time that tends to be the behaviour of a wave 3. Anyway, like I said, let's move on and have a look at this bearish count. So this is one of two, but well, it's the only one left. The other one is no longer valid. We'll come and have a look at that in a moment. So A, B, and 1, 2, 3, 4, 5 down in a flat, and we've got a fifth wave to come. Okay, we cannot come back beyond 21.60.98. Okay, because then we can't have 4 coming back into wave 1 in our C wave of our flat. Right now, I've had someone suggest that, well, maybe it's an expanding diagonal like yours in the other count, Tom. Mine was from here to here, and it was legal in both linear and log. Okay, just as a quick reminder, this is the alternate bullish count, right? The alternate 1 into 3. Woohoo! Click on the wrong thing. Excuse me. 1 to 3 to 5, which is an underthrow of the trend line. Very typical in a expanding diagonal. 1, 2, 3, 4, 5. Now in this case, 4 is bigger and deeper than 2 in linear and log. 3 is longer than 1 in linear and log, and 5 is longer than 3 in linear and log. This is not true when we take the pivot from a different position. So when we look at it in the bearish interpretation that I just mentioned, which I have seen used elsewhere, this 3 and 4, sorry, 1 to 3 to find 5 and 2, if we come off of log and measure this, it's completely wrong. Now I've seen some people justify their decision, here's 3 being far too short to be an expanding diagonal. Okay, so it doesn't work. Now I've seen people say, oh well, it works in log. Well, if you're just choosing the one it works in, then you're being pretty fucking biased. Okay, the rules for Elliott wave are rules. Okay, 3 has to be longer than 1 in an expanding diagonal. 4 has to be deeper than 2. Now I take that as literally has to be. It can't just be in the time frame that we want it to fit in. It has to literally be that, and that means it has to be a linear measurement. It has to be correct. Okay, so if you don't get to just pick the time frame that suits your bias. Right, your bias has to fit both of the scales. It has to fit log and linear, in my opinion. Otherwise it's not correct. So drawing that as an expanding diagonal doesn't work. So in that case, if this is a larger flat, A, B into C, this 4 cannot come beyond 2160.98, which leaves very little room to do it. Now it is still technically possible, because we believe this is 5, this is 3, and this is shaping up to be 5, so it could be a zigzag, and we could roll over and this could still be correct, and that's how we get lower in Ethereum. The only other alternative, which I saw, which I no longer believe to be correct anyway, let's just put that back where it was, is this one, that we've had W, X, Y, X, Z, or W, X, Y, with this being A, B, and C. This is no longer possible, this interpretation. We did not make that lower low in November, which we did in Bitcoin, and that has basically corrupted this to the point where it just doesn't work anymore. So if this is a final A, B, and C down, then this interpretation of 1 flat into 2 running flat, 1 into 2, we've come back beyond 1 into 2. So let's just shift this around and correct it while we're here. Okay, we've got to delete a few things. Can't be A, B, C now. Delete all of this, and we're going to have to ignore that as 5. We're going to have to put in another A, B, C. Then we're going to have to do something which looks really fucked up, pardon my language, because we didn't get that lower swing like we have in Bitcoin. It changes the structure here. So if this is now a giant zigzag, we now end up with, oh, bear with me, W, X, Y, X, and Z. Now we know it can't work as a diagonal, because when we measure these in linear, they won't work. Take us below 0, because we wouldn't have had the 3 in yet. So this has to be another ABC if we're going to make this work. This is another ABC into X, because we've got a motive wave. We haven't gone 3, 3, 3. It's not another zigzag, bunch of zigzags. It's a motive A, B, C zigzag. All right, because we don't come back to beyond 89%. Right, so see, we don't come back to 89%. We don't come back to 90. So anyone who's hoping to interpret this as 3, 3, 5 is talking bollocks, because it literally can't be a flat. Okay, so it has to be a zigzag in here, which means it has to be labelled ABC, which means it has to be part of either a larger B wave, and there's no 5 down here for A into B, and we're not predicting an 89% retracement to the high. So this has to be another X. Now, if that's the case, it looks flipping weird, to say the least. All right, for some reason, the corrective X here is bigger than the entire first 3 waves down. So I don't think so. I'm going to put that as the lowest possible probability of all the counts that we have. Okay, because it's just the relationships are awful, and X coming back into a prior W, I don't sit well with that at all for a zigzag, for a triple zigzag. And if I had a clear 5 down here, I could just say ABC, but I don't have a clear 5 down here. It looks like 3 waves. If we're going to say ABCW, we can say X and Y as an ABC. In fact, you know what? I think that's going to work better. But then we got a problem. We've got to get 5 into here. Right? And I've struggled. The only way I've managed it is with an expanding diagonal. Oh, I really did not intend to carry on like this. How can I wrangle this? Okay, how about them? A, B, C, and it's a huge zigzag. Right. I think that's, honestly, actually, come to think of it, it's the only fair way I think of doing it. Because if I'm going to allow myself, as an alternate idea, 5 down here. Sorry, it's not from that, it's from there. 5 down here, then that could be A. This could be B. And then you could have C. And that's going to be the only corrective count left that I think is possible. So there you go. Let's put them now in order and let's do some summing up before we go. Sorry to have taken so long. Alright then, so we've got primary count is bullish. And we've gone over the classical analysis as to why we think this looks so good. Zigzag followed by this pattern. Zigzag followed by this pattern is almost a perfect mirror of it, just in miniature. Right, that ends at 883.60. Next point is the alternate bullish count, which is that this was A, B, C flat, and we're working within this longer term pitchfork. 1, 2, 3, 4, and 5 to come to new highs. That would be my alternate. And then after that, we've got the bearish flat structure, which has to move lower before 2160.98. And finally, a very low probability corrective structure of an ABC of a larger scale. Now that requires 1, 2, 3, 4 in here as well, with this being the 5th. At that point, we're going to get way bigger than this prior correction, so no possibility of it being 1, 2, 1, 2, and I can't find a count to fit it on the larger time frame, so I'll have it as a very back burner idea. Now before we go, I've had this discussion with my Patreon several times, and I teach the standard trade setup for a series of videos on the Patreon as well as Elliott Wave, and I try to reiterate this in all my live streams. Finding the minimal risk setups with the best margin of risk is all you are really being asked to do as a trader. You are not being asked to be right or wrong. Couldn't care less. Don't start screaming Tom's name from the rooftops if he gets it right. Alright? And I couldn't care less if you bitch at me for being wrong either. What we're trying to do here is get an entry as risk as well managed as possible, as close to a pivot as possible. That's all we're trying to achieve. So if you get 5 up, and 3 back. This is potentially 1 and 2, or A and B and C to trade into long. Worst case scenario, that is. Best case scenario is 1 into 2 into 3. Then we get 1 into 2 again. This creates an area of risk which is the smallest it's ever going to be for a long trade. You could be wrong and come back below this and invalidate like we would here, and then everybody will be like, oh well, you were wrong. Yeah, it doesn't matter. I got stopped out with minimal loss. I took the trade I could at the time I could with and managed the risk as best I could, and that's all anybody can ask you to do. Making money is what matters. Okay, and managing this margin here and being wrong is highly preferable to missing out completely, in my opinion. So don't focus on being right, don't focus on being wrong. Focus on finding the best possible entry points given the probabilities. The probabilities with a higher low, off of the June low we have a move up in 5, a move back in 3, we have a higher low. The probabilities are way on your side now to go long, to go higher. Off of that next pullback, that's 1 2, that is 1 2 1 2 1 2 1 2 coming back to you. That area you have, once that 2 completes, between that 2 and the invalidation point, is the best area of risk, or the best margin of risk you're going to get. Now, could it collapse and go through and you're wrong and you're out the trade and you're stopped out? Yeah, it could, but we're not interested in that. We're interested in taking the opportunities when they present themselves, and if you're wrong, that's the risk. That's the risk. Nothing's risk free. Okay, there you go guys. So thank you very much for joining me. If you're new to the channel, you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is massively appreciated. If you're interested in joining, there's a link in the description box below. Follow it, head over, have a read of it is, and feel free to sign up whenever you like. And if you're not following me on Twitter yet, please do so, as I always post to Twitter whenever I load a new video to YouTube. Alright then guys, take care of yourselves. I'll be back with you as soon as possible. All the best. Bye bye.